Okay, welcome everybody, and thank you for joining us for Down Payment Program Basics. The goal today is to give everybody just a basic introduction and overview of some of the most common types of homebuyer programs that are out there across the country, in your market, in every market, big and small, healthy and distressed, urban, suburban, rural, and so forth. And so we're going to give you a lot of information here, but we're not going to get into the nitty-gritty details of particular programs or examples of programs. We really just want to give you, a big picture view of what kinds of opportunity are out there across the country for prospective buyers, for you guys to promote, and so forth. So let me just to clarify, let's define what we're talking about here. We're talking about loans and grants and tax credits and all kinds of other homebuyer programs that eligible buyers can use to achieve their down payment faster or obtain a down payment faster. They can use these programs to cover closing costs and prepaids in a lot of cases, and ultimately get them into a home sooner than they would have otherwise, and often enough sooner than they thought they could. So bear these things in mind as we go, and we're going to look through down payment programs, mortgage options from housing finance agencies, tax credits, and so forth. But bear in mind, the purpose of these programs is to help more buyers get into homes responsibly and faster. So with that, let me actually put a quick poll up on the screen. We're going to keep this interactive, so use the chat box, ask questions. Melinda Harris, a member of our team, is in the background. She'll be answering questions as we go, and we'll have Q&A at the end as well. But let's start with just tell us who you are. Are you a realtor, lender? Are you with a housing finance agency? And you can click your answer right there on the screen. Just click on the screen and we'll record the answers, and we'll take a look at who our audience is today. And we still have lots of people logging in. If you're just joining, use the chat box. Let's be interactive. Ask questions. If you've got experience or if you have any insight or feedback as we go, then use the chat box to give us your thoughts. All right, so I'll give everybody, got about 85% of you, almost 90% of you have voted. Click your answer on the screen here and tell us your profession or your role, and then we'll get going here. And let's see, a couple more seconds, and then I'm going to close this poll. All right, so we're about 90%. Okay, so I'm going to go ahead and close this. All right, now, here we go. 66% of you, about 2/3 of you, are realtors or brokers on the real estate side, but we do have a big audience of lenders here today. And for those of you who are other, use the chat box, tell us what your role is. I'm happy to hear from you guys as well. But to put this into perspective, this information is designed to help really two audiences primarily: realtors and brokers, to understand the depth and the breadth and the variety of the opportunities out there for home buyers in your market, in any market, and to have a sufficient understanding of the basics of these kinds of programs for down payment, closing costs, tax credits, and so forth, that you're comfortable to start talking about them with a buyer and start using down payment resource and our tools through MLS integrations, association integrations, and some of the other tools we offer, to start telling consumers about these programs. And for you lenders, the first place those realtors are going to go to get questions and to set expectations and to understand and pre-qualify buyers is to you guys. So lenders, you are here in support of the realtors in the audience and in support of your referral partners in your market to make sure that they have a partner lined up, you guys, the loan officers who do these programs, to get their prospects and their buyers through the pipeline and to help set proper expectations, write contracts, get to closing, and assist these buyers with down payment programs. Okay, so I'll get that off the screen now. All right, so that's what we're talking about: loans, grants, tax credits, all these other programs across the country to help buyers get into homes faster. All right, so now I'm going to get into kind of some big picture background. We at Down Payment Resource produce a quarterly home ownership program index. We've been doing this for a while now, and it's a snapshot with a different story every quarter of all of the homebuyer programs that are out there across the country. And most recently, fourth quarter of last year, there were over 2,400 programs across the country, and we're going to get into what kinds of programs these are, from over 1,200 housing finance agencies or municipalities or employers or other program administrators. So just that alone tells you that there are tons and tons of opportunities. There's a big chunk of the market that can access these programs. They just need to become aware of them. Realtors need to talk about them. Lenders need to support them. And home buyers, prospective buyers, need to know that these are out there. And so what we're doing is trying to educate people about all these opportunities. And these programs change all the time. Income guidelines change. Every year they might renew their funding source or gain funding from a different source. And purchase price limits, assistance amounts, down payments amounts. All of these things change constantly, right? And so what we do at Down Payment Resource is track all of that and update every one of these 2,400 plus programs on a monthly basis. So you can rely on Down Payment Resource to provide current, accurate information about all these programs, and then you can go out and talk about them and promote them and market them and open up conversations with prospective buyers about the opportunities available in your market. And you can kind of see from the graphic here how many changes we captured in just one quarter. So this is a constantly changing set of opportunities, but we're doing all that work for you so you can go out and market and promote and talk to buyers and educate them and start conversations. Now, geographically, where are these programs? Literally everywhere. There isn't a state or a city or a county in the country that's not covered by some kind of down payment program or tax credit or down payment loan or grant. And 84% of all of the programs across the country have money available for buyers right now today. They are funded and available for buyers walking in the door to reserve funds, pre-qualify, close with down payment help. Now, some people ask us, well, what about that other 16% that aren't available right now? Why do you even track those? Well, because they come back. And so, a program may use up all of its funds in the first 3 quarters of its fiscal year, and for the 4th quarter they have to go out and secure more funding. But when that program comes back, we still track it, we still monitor what they're doing, and we keep that updated and fresh in our system so that when it comes back or becomes available again, you have current, accurate information about that program. All right, so again, goal here, make more buyers aware of these opportunities and don't be fearful of and don't buy into misperceptions about these programs so you can expand your own business as a realtor or as a loan officer. Now, this is getting into the kinds of programs that are out there for buyers. 70%, and this is from 2 quarters ago, I believe, from our index 2 quarters ago, but still about 70% of all of these 2,400 plus programs in our system are down payment and or closing cost programs. So that's neighborhood stabilization programs, which are kind of hyper local. We'll look at some of the criteria around programs like that shortly. But these are by and large down payment loans, whether they're silent loans, deferred loans, forgivable loans, and grants, which are true gifts for down payment and closing cost, and sometimes prepaids. And again, we'll look at some of the eligible uses of these funds. About 10% now of all the programs in our system are mortgage credit certificates. And we're actually going to show you when we get to the MCC section the rise in usage of the mortgage credit certificate as an alternative to a down payment program. It's pretty compelling what's going on with mortgage credit certificates, and we're starting to see data and stories and activity around these tax credits, and we're going to talk about those today because it's an important part of the homebuyer opportunity. And then there are first mortgage loans, those are from state housing finance agencies almost exclusively. So when a state housing finance agency, and every state has one, offers a first mortgage product that they combine with a down payment program, that's about 10% of the programs in Down Payment Resource as well. And then there are all kinds of other programs which we're actually not really going to get into today because they're kind of in the minority as far as this broader database of opportunities. But employers, a lot of employers offer down payment help. There are programs for match savings accounts. And there are some other kind of outliers that there aren't too many of in our system, but we still track and we increasingly monitor as they become more popular. All right, now, who offers these programs? Who administers down payment programs? Where do you go to get these programs? The state housing finance agency in your state is typically the first place to start because their programs are generally available statewide, so the audience is wider. They can serve more of your market. But they also typically have a broader array of opportunities. affordable first mortgages, down payment and closing cost programs, and they may have several different kinds with several different guidelines and benefits and awards for the buyer, tax credits and so forth. So state housing finance agencies will typically offer the broadest and most diverse array of programs, but cities and counties across the country offer all kinds of down payment programs. The guidelines are different by market, by program administrator, by program itself. One thing that won't necessarily be on a slide here today is, the income limits and the purchase price limits of these programs. They cater to the medians in that market. So in a higher cost market, you'll see programs with higher sales price limits or purchase price limits, higher income limits, bigger down payment amounts, and so forth. And then housing authorities, nonprofits like NeighborWorks, Neighborhood Housing Services, and all the nonprofit housing agencies around your market. Some dedicate resources to homebuyer education and homebuyer counseling, and some also offer down payment programs or other kinds of homebuyer programs. And we mentioned employers before too. And this is the tip of the iceberg. There are land trusts and all kinds of other things where, or entities that offer homebuyer programs. Now, some of the common requirements. When you signed up for this webinar, we told you we were going to tell you the most common types of programs, what they all have in common, and what makes them different. How they differ amongst each other. So the common requirements really sort of across all of these are for owner-occupant buyers. All of these down payment and closing costs and tax credit and other programs, these are not for buying vacation homes. They're not for investors looking to purchase investment properties. These are all programs for owner-occupant buyers. A lot of them, many of them, have a minimum buyer investment. That could range from $500 to $1,000, 1%. It's minimal, but there is often a minimum buyer investment. Now, homebuyer education, we think is critical and important, and there's a lot of data out there to support that homebuyer education as a requirement to get into these programs or to access these funds is an important component of and even predictor, predictor of future ownership success, long-term successful home ownership, financial stability, and so forth. And of course, for any of these programs, the buyer still has to qualify for their first mortgage, right? But consider this, you're generally talking about financing buyers when you're talking about down payment help. In fact, you're probably exclusively talking about financing buyers. So while they're applying for or pre-qualifying for their first mortgage, have the lender go ahead and investigate down payment programs that are available in the market, and they're already putting together a package for the first mortgage. Duplicate the bank statements, the pay stubs, the W-2s, the loan documents, depending on the kind of loan they're using, and go ahead and apply for a down payment program as well. All right, now, we did a study with RealtyTrack early last year, and looked at how many homes across the country were eligible for these programs. And some of you may be saying, well, wait a minute, we're talking about buyers and getting down payments for buyers. Well, true, but the location of the home, the price of the home is an important factor as well, because the location determines which programs you can even consider, and the price of the home determines which programs are available at that location, because beyond the maximum prices that the program administrator will allow, the home is not really eligible, so therefore the buyer is not eligible. So 87% of the homes, not listings, right? Just 87% of the homes across the U.S. were eligible for one or more, and often many, down payment or closing costs or tax credit or other home buyer programs at the time we did this research last year. And so that covers the buyer, the homes, the basics. Let's dig into the 3 most common types of homeownership programs. And before I do that, I want to launch a poll here. Let's ask another question. So, have you ever used a down payment program with a client? And again, click your answer right there on the screen. I'll give everybody a couple of seconds here, and just tell us, is this something that you regularly promote and market and talk about and close with? Or is this something you've never done? Or are we compelling you to do so now? Anyway, I'll give you a couple seconds here. We're already at 60% of you have voted. And go ahead and click your answer on the screen, and then we'll take a look at the results. Okay, up to about 80% of you voted. So, all right, a couple more seconds here, then I'll close this poll out. Click your answer on the screen, and we'll take a look. All right, so let me close this. So the question is, have you ever used a down payment program with a client? Let me close that, and we'll share the results. 10% of you regularly do so, and that's great. You guys are champions of these down payment programs and all of the opportunities that are out there, and we fully support you. But if you have only occasionally done these programs, we would ask why. Is it because you're not aggressively marketing to first-time buyers? Do you have referral sources that generate other kinds of buyers? Are you doing a lot of transactions with people in the military who just use VA loans? And by the way, using a VA loan plus a down payment program is even better than just using a VA loan. And for those of you who've never done this, which is obviously more than half the audience here, we would ask why again. Are there misperceptions about these programs? Did you not know how many were available? Have you done a search? Have you used downpaymentresource.com to see what kinds of programs are available in your market? Have you connected with or explored or talked with your state housing finance agency? Do you have lender partners that maybe do these programs and that topic has never come up? So anyway, we're going to show you a little bit today and a lot more in some upcoming webinars about how you can get more involved and do more of these programs, understand them, talk about them, promote them, and educate more buyers. All right, so let's dive in here. Down payment programs, the most common type of program in our system. We saw that down payment programs account for about 70% of all the home buyer programs in our system. Okay, so basic requirements. It's the most common type, typically funded by nonprofit or government-funded entities like a municipality or your state housing finance agency. And the assistance amounts that these down payment programs offer can range from a couple $1,000s to tens of thousands of dollars. And again, that partly depends on where you are. In Southern California, for example, you're gonna commonly see down payment amounts available up to 20, 30, 40, 50,000 even. Now, in other markets, that may be 5 or 10,000, but homes are cheaper, right? So 5 or 10 might be 3% of a median priced home. So those are just some basics, but what can those funds be used for? When you're talking about down payment programs, typically, I mean, obviously they can be used for down payment, but typically they can also be used for closing costs. Now those may be defined as, eligible closing costs may be defined differently by program. Likewise with prepaid expenses, it's not uncommon to see these programs available for prepaids as well. And then there are some programs that will allow those funds to be used for maybe down payment and closing costs, and also some repairs to the property, maybe to bring it up to code or to bring it up to livability standards, and then principal reductions, and there are other uses as well. But certainly down payment and I would say closing costs and to some extent prepaids are the most common uses for these funds. So they're not even just for down payment. You can use some portion for down payment. Sometimes there are additional or separate amounts for closing costs. It depends on the program. They're all different, right? And that's what makes this all so interesting, is every program is unique. First-time home buyers. So there has long been a myth that all of these programs are only for first-time home buyers. And I think this was 2 quarters ago where we kind of myth busted around our third quarter 2015 home ownership program index. 37% of the programs in Down Payment Resource did not have a first-time homebuyer requirement at that time, and I think it's still around 35, 36%. So that means, first of all, a first-time homebuyer is someone who has not owned in the last 3 years, and there are still more exceptions to that even, but that's HUD's general rule, and that's what these programs follow. But there are plenty of instances or programs or scenarios where you don't even have to be a first-time home buyer to qualify. Repeat buyers, boomerang buyers then become eligible. Targeted areas, we'll talk a little bit about that in a few minutes. There are certainly plenty of scenarios where you either don't have to be a first-time home buyer at all, or there are exceptions for certain areas, certain professions, military background, and all kinds of other scenarios where homeownership history is not a factor or a disqualifier. So, down payment terms. Now, they're all different, right? A down payment loan could be forgivable, maybe forgivable after some affordability period, like if you live in the home for 5 years, 7 years, then the entire thing becomes forgiven, effectively becoming a grant at the end of that. Some of these do have to be repaid, and the terms are going to differ by program. Some of them are grants. It's a gift at closing. There is no lien, there is no repayment, there is no interest. There's no monthly payment. So they're all different, but generally these are second liens. Some will take third lien position. That opens up the opportunity to layer perhaps a state down payment program with a local down payment program. But there are certainly plenty of them out there that defer payments, don't have monthly payments, forgive the original loan in increments year over year through an affordability period, don't bear interest, don't require monthly payments. But again, they're all different. It depends on the program. Eligibility. All of these down payment programs typically come with income limits based on household size. Now, what we've seen over the last couple of years is a steadily increasing cap on those income limits as guidelines become more flexible. We see anything from 80 to 100% AMI, area median income, up to 140, close to 200% area median income. And again, it depends on the program. And not to keep saying that to deflect, but it truly does depend on the program because they are all so unique and different based on funding source, administrator, the market that they operate in, and so forth. Sales price limits. Most programs come with a maximum sales price beyond which that program is not available to the buyer of that property. So that means in Southern California, the max sales price limits are not 200,000, right? They're 5, 6, 700,000. But in Atlanta or Dallas or Chicago, it might be 300 or 400,000. It depends on the market and what the market medians and averages are. Property location, we mentioned earlier, is also a factor here. Where the property lies, what state, what county, what city, what zip code, what census tract, what neighborhood, that determines which programs are even available at that location. Is there a county program? Is there a city program? What state programs are there? And so the location of the property determines which programs are available to the buyer of that property, just like the price does. And then, of course, you've got all the credit requirements that come with first mortgage financing. And that's going to be different by program, but they're looking for minimum FICO and certain credit history and so forth. But typically compatible with or comparable to FHA guidelines or perhaps conventional guidelines. And then, of course, home ownership history, but we've already covered that. These aren't just for first-time home buyers, and home ownership history is treated differently by different programs with different incentives and nuances and so forth. All right, now, home buyer education. We hit on this earlier. It is often required. Typically from a HUD-certified homeownership provider or counselor. There are increasingly online options available. For example, from eHome America or even Framework, more and more housing finance agencies and program administrators are accepting online, HUD-approved online homebuyer education providers, which is a big deal because it enables your prospect, your buyer, to complete that course earlier because they don't have to wait for a scheduled classroom opportunity to come up, and also to complete that at their discretion. So they can do it at night, they can do it on the weekend, they can do it when the kids go to bed or whatever they need to do. And ultimately that creates prepared buyers and successful owners down the line. So we're big proponents of home buyer education. Now, that was all down payment programs, right? Those that are for those loans and grants that are for down payment and closing costs. But let's look at another common type of program in our system, the affordable first mortgage. These are typically, often come with reduced interest rates or expand first mortgage options, maybe offer some different mortgage insurance options or no MI options, and they're also typically from the state housing finance agency in your state in conjunction with down payment options that they offer. So the idea here is offer affordable first mortgages and down payment help to expand the purchasing power of that buyer, to lower their monthly payments and reduce buying costs, which is down payment, but also closing costs, prepaids, and so forth. So those are the advantages of these first mortgages. An example of something we include in parts of our down payment resource system is USDA loans. They can offer 100% LTV and some pretty flexible MI or no MI options in rural areas where you may not see so many city or county programs like you would in suburban or metropolitan areas. And so, and of course, often USDA first mortgages can be combined, or it's an eligible first mortgage type for a lot of down payment programs that you may see from a state housing finance agency. So that's the kind of service for underserved markets that these affordable first mortgage options offer. And because they're typically from state housing finance agencies, they're also typically available statewide, serving those rural areas or those ex-urban areas that may not have so many local down payment options. All right, now the last thing I want to cover here is the mortgage credit certificate. We are actually going to, we're polishing up and finalizing a series of webinars where we're going to interview some state housing finance agency reps and some tax credit providers around the country to really dig into this unique tax credit is what it is. That's been around for a long time, but it hasn't been that common. However, that is quickly changing, and we're going to visualize how quickly that's changing. But basically, a mortgage credit certificate, or MCC, is a federal income tax credit. It is an annual credit available based on mortgage interest paid, but it offers a tax credit for the first portion of the mortgage interest paid as opposed to the standard mortgage interest deduction. So we're talking about the difference between a tax credit and a tax deduction. We're not going to get into tax here and tax law and tax policy other than to tell you, and there's an example on the right which kind of illustrates it if you want to follow along, but basically a tax credit is dollars in your pocket versus a tax deduction, which is a reduction of taxable income. So a tax credit is always favorable over deduction. This is based on the mortgage interest paid every year, so you can take this tax credit every year for the life of that loan when you apply for and receive a mortgage credit certificate. Reduces your tax liability, increases your qualifying income in some cases, because some mortgage credit certificate providers will use the reduced tax liability and the reduced taxable income to increase qualifying income. And of course, it's good for the life of the loan. I covered that. And if you're looking at the example on the right, note too that after you take the tax credit on the first 20 or 30 or 40% of the interest paid, whatever that program allows, up to the IRS limit of $2,000 in credit per year, then the rest of the interest you paid is still deductible as it would have been otherwise, right? So you don't even lose the deduction. You just gain a tax credit for the first portion of interest paid, and then you can claim the rest as a deduction. That's probably confusing. Just know that MCCs are on the rise. It's a wonderful way to either add value to or offer an alternative to down payment help for more buyers. Maybe they don't need down payment help, but if they qualify for a mortgage credit certificate, you just offered them a life of loan tax credit that they couldn't otherwise have gotten, and that in itself is a unique value add and a unique benefit. I said I would illustrate the rise of the MCC. From 2010 to 2014, volume of MCCs, and was kind of flat coming into 2012 too, but the volume has basically quadrupled since 2010, and this doesn't even go through 2015 yet. We don't have that data compiled yet, but MCCs are on the rise because they're such a great value add. They're super popular with so many state housing finance agencies that offer them. We saw even more spin up in 2015, so we know that number is even bigger, and we just see such great reactions to and feedback from state housing finance agencies regarding their MCCs that they're doing everything they can to keep that plowing forward and keep that volume increasing. All right, now, unique features and benefits. I'm going to go through this quickly because I told you I'd keep this to 30 minutes, and actually I'm there now. All right, targeted areas. Typically no first-time homebuyer requirement, typically more down payment dollars available to a buyer, typically higher income limits and higher sales price limits, but they are more narrowly defined locations, perhaps a zip code or certain census tracts or a neighborhood where a down payment program provider is trying to incentivize buyers to move in, core service providers to live where they work, and so forth, and will offer unique and advantageous benefits like these to get buyers into that area. Likewise, with targeted professions, you may also see some of those same enhancements. So teachers, police officers, firefighters, nurses, municipal employees. Often you will see similar increases in assistance, income limits, sales price limits, waivers of first-time homebuyer requirements to try and get these core service providers into homes as well. Military, veterans, those with the military background, almost always no first-time homebuyer requirement for a lot of down payment programs in our system. And I mentioned earlier, think about combining that with a VA loan. Yeah, sure, they can get 100% LTV. They don't need a down payment. But if you give them one, that's more equity when they get into the house. And things like that, things like the mortgage credit certificate. What a great way to add value to a transaction and provide a unique and compelling service to a customer. And if you think about word of mouth and referrals, that's how you get it, right? you do something different that nobody else is doing. So an example of a great program for veterans, the PenFed Foundation has a Dream Makers grant. It's a matching grant. Veteran puts in X dollars, they'll match 2 to 1 up to a certain limit, and it's a grant, forgiven at closing, not a loan, no repayment, et cetera, et cetera. All right, disabled individuals, often no first-time homebuyer requirement. Typically, the disabled individual doesn't have to be the applicant. It can be a household member or a family member, and a lot of times those funds can be used for accessibility renovations or improvements to the home to make it livable for the individuals that need those renovations. All right, so with that, I'm going to say thank you and shut down the recording, and then we'll get into Q&A. And thanks for joining today, guys. All right, so with that, I'm going to say thank you and shut down the recording, and then we'll get into Q&A. And thanks for joining today, guys.